It is a bad hair day in the neighborhood, so you're getting my Pebble Beach hat. What do we got this week? Well, you know what? Interest rates, they're still pretty darn good compared to where they were 2 weeks ago. And is the Fed still taking on water? Is Fed Chair Powell's boat still afloat? We'll get into that here. First, let's talk about the big three. We got prices. Prices are still coming down just a little bit. We got inventory. Inventory is kind of sideways, but still pretty high. Again, right at 10-year highs. And then rates are actually ending the week right about where they started. So let's get into some of the headline news here. Inflation's a mixed bag. We got two big inflation reports this week. And then Powell's ship continues to take on water. We'll go through that. Rates are flat despite that inflation news. So let's talk about inflation. There was two big reports, the consumer price index that came out this week and the producer price index. And July CPI was flat. The headline was flat last month at 2.7%, this month at 2.7%. Core CPI, though, which removes the food and energy prices, went from 2.9% to 3.1%, which, you know what? That was what was expected. So not a huge increase in rates. Matter of fact, rates still went and managed to go down. And the main reason for the jump wasn't really tariff related. It was shelter related. It was used car prices and then medical care. Now, I will say this, furniture and audio and photographic equipment, those prices went up. Again, now that's showing that tariffs are having an impact, but those three items, their impact on the overall rate of inflation is so minimal, at least in these reports, that it barely made a dent. Shelter is the main reason why inflation went up on the core side. So on Thursday, we had the producer price index, and the producer price index is the wholesale or the servicers inflation, and that actually spiked a lot, 0.9%. And really what that versus what, 0.2%, which is what was expected. And really the headline went from 2.4% to 3.3%, and the core went from 2.6% to 3.7%. And really that shows that the tariff impact really is being absorbed along the supply chain. But you know what? Despite these higher than expected producer price inflation reports, and really slightly above expected on the consumer price index, economists still think there's a 100% chance that we are going to have a rate cut in September. So let's talk about how much of a rate cut. When you talk about rate cuts, you're talking about the Fed. And Powell's ship. Powell is the Fed chairman. He is in charge of the Federal Open Market Committee. And right now, he's got a meeting in September. All right, the meeting in September is where they're going to make their decision on whether or not they should lower the Fed funds rate. This week's reports, the inflation reports, may be the bilge pump that the Fed needs to help stem the flooding, all right, to basically right the ship. Because it didn't show inflation going down. Instead, it showed inflation steady, in fact, maybe going up a little bit. But you still have a lot of turbulence. Secretary of Treasury Besson is calling for a 50 basis point cut to the Fed funds rate in September. And he wants to see 150 to 175 basis point cut by the year's end, which would take the Fed policy down to neutral. Right now, the Fed is in a restrictive policy. But if they lower the Fed funds rate down to right around 3% from the 4.25, 4.5% rate or range that it's in, then they are in a more neutral policy. Quite frankly, that's really where they should have been over the course of the last several months. So you got Secretary Besson, i.e. the White House, putting pressure on the Fed. You also got internal pressure. Fed Governor Bowman is calling for 3 rate cuts this year, although not necessarily a 50 basis point cut in September. As a matter of fact, several of the Fed presidents are talking at about a 25%. There's a much less chance of seeing a 50 basis point cut in September. And if you remember from last year in September, because the Fed started playing catch up, guess what they did? They did a 50 basis point cut. And interest rates shot up because the following day we had a jobs report that showed unemployment was very low and the labor market was still strong. So I think they are going to err on the side of caution and probably do a 25 basis point cut. And you know what? Not all Fed governors are rate cut hawks. There are a couple, two. Schmidt from Kansas City and Barkin from Richmond are taking a more reserved approach, and they want to see the numbers. They want to see unemployment go up more. They're not convinced yet. You know, there's a lot of other news, though, that is going to impact the Fed. All right, continuing unemployment claims for the 12th week in a row showed the claims above 1.9 million. Right, we're inching closer to that 2 million mark. So if we get there, and we get this report every week, if we get to 2 million, that is sure thing that we get at least a 25 basis point cut. Next week, there's not a lot of economic news from the U.S. However, there are several countries, including Canada and China, that are going to make their Fed fund equivalent rate cut decisions next week. And that will definitely have some impact because we are not an insular economy. We are a part of a global economy. And the other thing, the Fed is meeting next week. They're meeting at Jackson Hole for their annual economic policy summit. There's always this media attends this. There's always a lot of talk, and what the Fed says always moves the rates. I think it becomes apparent that we are going to see a rate cut in September. You'll see interest rates go down. But, you know, here's the other thing with that meeting, Jackson Hole. Will the Fed unite? Will the Fed unite behind Fed Chair Powell? Typically, you would expect that. But here's the other thing, guys. Will the president choose the next Fed chairman before Jackson Hole? And if it is a member of the FOMC, will that member of the FOMC lead the mutiny from Fed Chair Powell's current policy decisions? And let's also remember, President Trump has already selected the replacement for, I think, Fed President Gherkin, who basically resigned last week. So Fed Chair Powell's already got Fox in the hen house when it comes to decisions on rate movement. So anyway, a lot of going on next week with the Fed, something to keep an eye on, a little bit of drama, grab your popcorn. We'll see what's gonna happen. So let's take a look at rates. We started the week right around 6.15% for VA rates. We end, at least the end of the day on Thursday, at 6.17%. But still, that is considering that inflation reports, the CPI was as expected, maybe a tad higher, and producer price again was much higher than expected. So considering the economic reports we received, the fact that VA rates are still below 6.2%, that's good news as we head into the next week with foreign countries making their rate decisions, and then the Fed meeting in Jackson Hole. And right now we are almost exactly where we were at last year at this time. And you can see right after the Fed met in Jackson Hole, you can see the huge drop in interest rates that we saw leading up to the Fed meeting in September. So will history repeat? Will it rhyme? We'll see. So what does this mean? Well, mortgage apps were up just 1% last week for buyers, up 23% though for refis. And I have several clients, and let me tell you, if you're looking to refi, don't take the first offer you get, especially if it's from somebody you don't know, because everybody and their brother knows if you have a high rate. Because if you bought a home in the last 3 years, it's a really good chance you do. And they don't necessarily have your best interest in mind. And what you want to know is, what is the recoup on that refinance? And also, it may not make sense to refinance if you are going to sell your home within a year to 2 years. Really something that you should be paying attention to. Don't just accept what you get in the mail or what you get from a random phone call. Inventory in Oahu is at the highest in 10 years still. While rates are down, buyers are still not getting off the couch and off the fence and into your car. Seller credits are still prevalent. I had 3 offers so far accepted this week, and all of them VA, all of them had $30,000 or more in seller credits. That's pretty good. And what that is allowing some of my clients to do is get their rates into the 4 on a 5-1 arm. which is a great deal. 5 years spreads the risk out over that period, and you're in the 4s for 5 years. That's pretty solid. That is a great rate considering your historical rate average is right around 5.5%. Now, for a buyer, is the best time to buy. Really, on the west side of the island, my clients are getting some incredible deals right now. Sellers, hey, rates keep going down. You're going to get more buyers. You're going to get more traffic. Make sure that you're priced right. Make sure you're having that conversation with your realtor about seller credits and what you should be doing to get your home sold. Again, marketing is important. How you present your home, not just the appearance, but the monetary appearance, super, super important. And if you can't sell, be ready to refi, all right? If your rates are in the 6s, we're looking pretty solid on refinances as we go into the latter part of the month. And that's all I have for you guys this week. Have a great week. Aloha.